There was a popular adage in the 1950s that said that you should sell in May and go away. It is something that has remained quite popular. But given the fact that the stock market is still quite choppy so far and that tariffs are on and off and everything in between, is it something that can still be relevant in 2025? And what are the pros and cons of implementing such a strategy? And what are the things that could be missing within the strategy, and how would you even apply it in a time such as this? Let's go ahead and break it down. Let's start off with what the strategy is and how it truly works and why it even became popular. So this really started with I was going to say a sports almanac, but a stock almanac, which is weird concept to even think about, but essentially it just gave you what was supposed to happen with the stock market. And there are a few rumors and kind of history behind it, but long story short is you sell your stocks in the month of May, you come back when I guess after Labor Day, when summer is over, and then you come back and invest in stuff. And there were a few reasons, but the main reason was they felt, and there's some data behind this now, that the winter time they define as November through April, that is when the stock market is really booming. And there's some truth to that. And from, again, November to April, that's when the stock market is best. But from May through September, stock market's trash. That's the worst 6 months anyway, so why even try? Why even invest? So that was number one. Number two is, back in the day, right, we're talking the 1950s, you didn't really have, CNBC. We definitely didn't have internet like that. You didn't have all these investment apps. You didn't have a channel like this, right, to stay informed of the stock market. So, especially if you're traveling, just sell it, because you couldn't get back to your stockbroker and call them and tell them to buy and sell whatever. So you would sell in May and go on your vacation, because again, you didn't have access to move and do what you need to do if there was a tariff announced or tariff pause or whatever. So it made more sense to do it back then. So that was the point. But it ain't the 50s no more, thankfully, at least for me, right? So does it make sense now? No, okay, but not for the reasons that you think. So I could argue a few ways, but the first one is this. I don't think it makes sense to just sell in May just because, it's Thursday or Friday or whatever day that May 1 is, but more so because while yes, the stock market could be choppy, it's not necessarily the day of the week or the day of the month, but it's more so that even though the market can be choppy, even though tariffs could be on or off or what have you, the strategy should still continue to be your strategy. And for me, and for you, or for whomever could be watching this, my argument would be, if you're going to make a change to your portfolio, I would prefer to rotate my stocks as opposed to straight selling. Meaning, I'm not going to sell just for the sake of doing it. I would rather rotate. Meaning, we have seen what the stock market has done so far this year, right? But one shining example, is not the only one, and we are going to talk about more later this month, is a company like Netflix, a company we talked last week about, Dollar General and Dollar Tree. There have been some very good stocks in this not so great stock market. So if you have some stocks that haven't done well, you've had them for long enough, it might make sense to just say, all right, well, let me rotate from X stock to Y stock. Your financial situation can get quite complex. And no, I'm not just talking about your investments, your debt, your taxes, your budget. I mean, when was the last time you looked at your life insurance portfolio and decided whether or not you have had enough coverage? All of these things can be quite overwhelming unless you get some help. And that is why I've partnered with Wealthmore. Think of them like Peloton, but for your money. On the app, you can join one of their free advisor-led communities where they're focused on things like investing, retirement, home ownership, and more. Or for as little as $25 a month, you can talk to or message a wealth advisor at any time. You can download the Wealthmore app and find me on the app as well right now. Download Wealthmore and use the code BuildingBread today. There's a rotation here. And I say this every year, especially more so in January and February. What worked last year might not work this year. This could be your time to rotate. Now for me, most of you guys know that I rotate, I adjust, I rebalance my stocks every June and December, because that's just, I do this every 6 months. Now, if you are starting this in May, right? You start in May, and 6 months from now, whenever that is, November, that just may be your time, right? You start whenever you start, right? So that, I think that makes more sense as opposed to just selling everything just for the sake of selling it, because data has shown us that if you are just a consistent investor and you're staying invested the entire time, that is usually the best way to invest. Because when you are missing out on what could be some of the best days, you actually cut your performance. So we don't know what is going to happen this year or tomorrow or any day. In fact, when it comes to the stock market, you could be hurting yourself. Now, it is true that May is the second worst month of the stock market, okay? Second only to September. But the missing piece of that, if you are selling in May and going away, you're missing out on June, July, and August. Okay, so there's 3 months of possible returns that you could be missing out on. Will these be positive in 2025? I don't know. Now, May could also be positive in 2025. I don't know. I'm not confident in it. I hope for it, but hope is not a strategy. But I'm not confident in that. But what I'm not going to do is take that off the board and not give myself an opportunity to gain from that. And the way I'm increasing my opportunity to do that is by trying to move my portfolio closer to the stocks that have a history, though it is a short history, a history of doing well in this type of market by repositioning, by rotating towards those stocks that are doing well in this type of environment. So things like a Netflix, things like a Kroger, maybe a Dollar General, maybe a Walmart, things like that. So that might be a smarter move as opposed to just selling everything and just saying, all right, I'm taking my hands off the wheel. We'll see what happens. Another thing that could make sense is there are a lot of people concerned about, could there be layoffs? Could there be a slowdown? The answer is yes. And what we are expecting right now is the impact of tariffs, depending on if they're going to continue. As of today, there is still a pause. That pause is not going to expire until late May, early June. As of today, there could be another pause. Who knows how that is going to play out? However, again, the reason why you're not seeing extreme price hikes just yet is because a lot of companies have what are called warehouses. Some people don't understand it. That's why I'm saying it that way. So a lot of companies have stocked up in advance, put their stuff in warehouses to avoid the tariffs, because just like you, and just like me, I've talked about tariffs 8 months ago. And when they saw this coming, they said, all right, let me order as much stuff as I can today before he's elected, before this stuff happens in November, right? Put it in a warehouse. I'm not paying the tariffs, stock it up. And eventually that stock of stuff starts to get sold off, and then they're going to have to start to order those things. Well, that stock of stuff is starting to wear down, and they're going to have to start ordering new things at a higher cost. That is supposed to wear out depending on which retailers you're talking to. At some point in May, you're going to start to see those higher costs again, mid to late May, early June. That is when most people are going to start to see those higher prices. Companies like Amazon and others are already showing you now higher costs. When you start to order, it'll say tariff fee or whatever. You are starting to see that now, and we're going to see how that starts to play out in the economy. All right, a little bit of breaking news. I just got back from working out, and from the time I recorded this video and from the time I got done working out, there was a report saying that Amazon was going to show you what the tariff cost was going to be on your order. The White House complained, and now they say, Amazon says, that they're not going to publish how much the tariffs are going to cost. That's weird, but in either case, the costs are still going to go up. You're just not going to see specifically and transparently where the costs are going to be shown. So something's going to be $20, it can go up to $50. You're just not going to see exactly, $25 of that was tariff. So we're going to continue to track the story. So yeah, that is how fast things are going, and I had to throw that in before I hit published. All right, back to the video again. If this translates into the labor market, which there have been some symptoms already, this is when things really start to get real. Okay, so in a response to that, from an investor perspective, I do think and I've said this before, it does make sense to stock more cash. Do you have to sell your stocks to raise more cash? That's totally up to you. My argument would be, are there some expenses you can reduce to just add more cash? If you have to sell some stocks to raise more cash, then again, talk to your accountant, because there could be some tax consequences there, or there's actually a way to save some money in your taxes depending on how you sell and from where you sell. So talk to your accountant about that, because I don't know what your portfolio will look like. Okay, but there is a way to do that. So how you raise the cash, up to you, but it does make sense to have some cash at the ready just in case. Not necessarily for investing, but just for protection, because things can get very messy in the middle of May, early of June, depending on how this thing does play out. So adding more cash makes more sense. Seeing where and how you may want to rotate makes more sense. And then also staying consistent also makes sense too. But selling and just getting out of the stock market altogether, that part doesn't make the most sense. And one of the other reasons as to why is because this has been an entirely fluid situation. We have been right the majority of the way. That doesn't make me perfect. It doesn't mean I have a crystal ball, because I don't. But this can continue to be paused. It can continue to change. Tariffs have been 10%, 20%, 107%, down back to zero, you know. So this can continue to pause and things can be okay. I do not know, right? So I don't want to remove the ability to receive profits, right, and get gains. We have seen with the whole Charles Schwab thing, the video, the short that I did not too long ago, where we had one of the best days we've had in 5 years, right? If you missed that day because you weren't investing at all, that might help you in the long run as things start to add up. So that's why you don't want to remove everything and take it off the table completely, but it might make sense to make small tweaks to your portfolio. If you want to know things to invest in and what areas of the stock market are doing well right now, then you want to check out this video right here.